You've heard the dream, right? Making money while you sleep. The whole laptop on the beach thing, with cash just rolling into your account automatically. But what if I told you that's one of the most dangerous lies sold to the masses? Today, we're going to pull back the curtain and show you why passive income is a trap and what the truly wealthy actually do to build their fortunes.
Welcome to Retire Rich. I'm your host, Michael, and today we're diving deep into strategies that can transform your financial future. If you're serious about building wealth, you're in the right place.
All right, here's the game plan for today. We're going to start by tearing down the passive income lie. Then we'll look at the rat race it's supposed to save you from. After that, we'll get into the one rule of wealth, what it means to mind your real business, and how to master the psychology of money. And we'll wrap it all up with a concrete action plan you can start using right away. Let's do this.
Okay, so first things first. Before we can build anything real, we've got to clear away the rubble. And that starts with demolishing this whole idea of the passive income lie. So you can see the difference right here, right? On one side, you have the fantasy, the beach, working 4 hours a week, basically getting money for doing nothing. But the truth, it's all about building systems. Think about that old story of the pipeline. You have two guys, right? Both are paid to haul buckets of water. One guy just works harder, carries more buckets. The other one, he vanishes for a year. And when he comes back, he's built a pipeline. He turns a valve, and bam, water is flowing 24/7. Now, was building that pipeline passive? No way. It was incredibly active work. The result is passive-like income, but the creation, the maintenance, that takes effort. You still got to patch leaks and upgrade the pumps. The goal isn't passivity, it's leverage. It's about making your systems work harder for you than you work for them.
And Robert Kiyosaki, the author of Rich Dad, Poor Dad, just nails it with this analogy. That promise of passive income, that's the carrot. It keeps you running, buying courses, chasing the next big thing online. You're always thinking that total freedom is just one click away. But you never actually get there, do you? Because you're the donkey pulling someone else's cart, usually the guy who sold you the dream. The real goal is to stop being the donkey and start owning the cart.
So if the passive income dream is the fake solution, what's the real problem it claims to solve? Well, it's a concept Kiyosaki called the rat race, and it's where most people spend their entire lives.
The rat race is this crazy, endless loop. You work your tail off in school to get a good job. You get it, you start making some money, and what's the first thing you do? You buy a car on credit. Then you get a promotion, right? So you celebrate by buying a bigger house with an even bigger mortgage. Before you know it, your expenses have swollen to match your new income. Now you're stuck. You have to keep that job to pay for everything. You're working harder, you're making more money on paper, but you're not getting any wealthier. You're just a hamster on a slightly fancier wheel. And this isn't just a problem for the poor. This is the default life script for the middle class.
In this table, this breaks down the core difference beautifully. The middle class is totally focused on their income statement. Their whole world revolves around one question: how do I get a raise? It's all about the paycheck. The rich, they couldn't care less about the paycheck. They're focused on the balance sheet. Their question is, how can I buy another asset? You see the difference? One group focuses on earning more just so they can spend more. The other focuses on buying things that earn more for them. It is a completely different game, and it leads to wildly different outcomes.
So moving on, if the rat race is the trap, how do you actually escape? Well, it all starts with one single, incredibly simple rule. This is the bedrock of all wealth. I want you to forget all the complicated financial jargon you've ever heard. Just for a second, this is all you need to know. An asset puts money in your pocket. A liability takes money out of your pocket. That's it. It's not about what your accountant says or what the bank tells you. It's all about one thing, the direction of cash flow. Ask yourself this question: does it feed you, or do you have to feed it? A stock that pays you a dividend? That's an asset. A boat that costs you money every single month for insurance, docking, and maintenance? That's a liability. It's not what it is, it's what it does to your bank account.
And please, make no mistake, this isn't just one of many rules. This is the only rule that truly matters. If you want to build wealth, you buy assets. Full stop. The great financial tragedy for so many people is that they spend their entire lives and all their money buying liabilities that they've been tricked into believing are assets.
Okay, let's break this down because this is a huge mental block for a lot of people. Your house. Everyone says it's your biggest asset, but does it put money in your pocket every month? Nope. You pay the mortgage, you pay the property taxes, you pay for insurance and repairs. It takes money out of your pocket.
Now, sure, it might go up in value over time, but from a cash flow perspective, which is how the rich think, it's a liability. Same with your car. It's a transportation expense, not an investment. The rich get this. Yeah, they live in big houses and drive nice cars, but here's the secret. They buy those things after their assets are generating enough cash flow to pay for them. Their assets buy their luxuries. The middle class buys luxuries with their own sweat, time, and debt.
All right, so the rule is to buy assets. Got it. But what does that actually mean in practice? Well, this brings us to the next big lesson. You have to mind your own business. And I'll tell you a little secret. Your job is not your business.
To get what I mean, let me ask you a question. When you think of McDonald's, what business do you think they're in? The obvious answer, of course, is the hamburger business, right?
Wrong. Ray Kroc, the guy who built the empire, once told a class of MBA students that his profession was selling hamburgers, but his business was real estate. McDonald's is one of the biggest real estate owners in the entire world. They own the valuable land underneath all those golden arches. The hamburgers, that's the profession. They're just the engine that pays the mortgage for the business, which is the real estate.
And that, right there, is the light bulb moment. Your profession is what you do from 9 to 5. You might be a software developer, a doctor, a plumber. That's your job. Your business is what you do with the money from that job. Minding your own business means you are laser-focused on one thing, building up your asset column. Your salary is just the seed money. The real work, the work that actually buys you freedom, is planting those seeds and assets that grow for you long after you've clocked out for the day.
Now look, understanding the math is the easy part. Buy things that pay you. Simple enough. The hard part, the place where almost everyone stumbles, is mastering your own psychology. Building wealth is less about spreadsheets and more about controlling your own fear, your greed, and your ego.
Everybody is afraid of losing money. The rich, the poor, it doesn't matter. It is a universal human feeling. The difference isn't the fear itself, it's how you react to it. For most people, fear is a giant red stop sign. The market dips and they panic sell at the absolute bottom. They're so terrified of losing that they just let their money sit in a savings account where inflation eats it for lunch every single day. For the wealthy, fear is a signal to be careful, sure, but not to be paralyzed. When they feel fear, they don't run away from the problem, they run towards education. They ask, okay, what am I missing here? What do I need to learn to turn this risky thing into a real opportunity?
Think about it like a sport. Some teams play not to lose. They're defensive. Their entire strategy is just to avoid making mistakes. That's the person who keeps all their money in cash. But winners play to win. They hate losing more than anything, but they understand that failure is just part of the game. For them, a loss isn't the end. It's a very expensive but powerful lesson. A bad investment isn't a reason to quit the game. It's tuition. It inspires them to get smarter, learn more, and come back stronger.
And there's another really interesting psychological twist here. The skills that make you money are often the complete opposite of the skills that help you keep it. Getting rich requires you to be optimistic, to take risks, to be bold. But keeping it? That requires humility, being frugal, and a healthy dose of paranoia, knowing that what you have can disappear in an instant. You have to be optimistic enough to buy for the long term, but paranoid enough to save for the crash you know is coming eventually. A lot of people who are great at being bold and taking risks end up losing it all because their ego tells them they can't fail.
Okay, we've gone over the myths, the rules, the mindset. Let's make this real. What can you actually do, starting tomorrow, to apply all this and begin your escape from the rat race? Here's your plan. Step 1. Master your cash flow. You can't manage what you don't measure. Get an app, use a spreadsheet, I don't care what you do, but you have to know exactly where every dollar is going. Step 2. Buy your first real asset. This doesn't mean you need to buy an apartment building. It can be as simple as opening a Roth IRA and buying a low-cost index fund to start building that asset column. Step 3. Keep your day job for now. Don't fall for that quit-your-job nonsense before you're ready. In a world with AI and job uncertainty, your paycheck is the fuel for your escape rocket. Use it to aggressively fund your assets. That's your real job security. Step 4. Invest in your financial education like your life depends on it. Read the books, listen to the podcasts, learn the language of money. The more you know, the less you'll fear. And finally, number 5. Create a margin of safety. This is non-negotiable today. Build a cash buffer that lets you sleep at night. That cash isn't dead money, it's your fortress. It's what allows you to survive a market crash without being forced to sell your assets at the worst possible time. It's what lets you win the long game.
So here's the bottom line. The path to real wealth is anything but passive. It's an active, conscious choice to see the world differently, to learn the rules of the game, and to prioritize building your freedom fund, your asset column over everything else. It's a choice you have to make every single day, with every single dollar. So, the only real question left is, what choice are you going to make?
That's a wrap on today's episode. If this helped you see money differently, smash that like button. Subscribe to Retire Rich for more wealth-building strategies, and drop a comment telling me what topic you want next. Remember, your financial freedom starts with the choices you make today. I'll see you in the next one.